We are back at it again here with another video with the Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. I'll ask from returns for you guys to smash that like button. Let's see if we can get today's video over 40 likes. And here we are with the SPY, the S&P 500 index, having a very volatile day to the upside and to the downside, right? A lot of volatility, and we're going to break down the news that came out today, creating and sparking this volatility. And as you see it here, it did a full transition from the dip area into the dark green bars and quickly back down. And we need to talk about what's going on here with this double bottom near the 52-week lows. Now, today within the volatility, our SPY bot sent out a bull indicator since 10:45 a.m. And from that moment forward, inflows crossed to the upside with full strength, and call options went up 200% plus within an hour, guys. And same thing to the downside, right? It sent out a bear indicator around 2 p.m. and from that moment forward, that bear indicator and the outflows crossed to the downside with full strength, and put options went up nearly 100 to 200% plus within minutes to an hour, guys. Now, if you guys want to receive this clarity and edge over the charts, you can now gain access to it as well. The link is down below in the description to the 42 vision indicators, getting connected to our SPY bot, QQQ bot, newly released Tesla bot, and we have many others on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities, whether stocks are going up or going down. And this is my opinion and perspective alone, not financial advice, but volatility is here to stay, guys. As today's chart reacted to the upside and downside, you could see volatility is here, and within the volatility, to be able to maximize, having a clarity and edge makes all the difference. It doesn't have to be 42 vision, but seek clarity and edge over the charts so that you can maximize within these opportunities. But if you find value in what we share here and you want to become part of a growing community of investors using these resources to maximize in either direction, check out the link down below in the description to the 42 vision indicators. So here we are with the SPY, the S&P 500 index, almost creating a double bottom effect here in today's trading day, coming right back down to test the lows of the day and kind of bouncing off of it. And the question mark is, could it continue? And what made things fall so quickly after such a strong momentum here throughout the middle of the day? We're going to break that all down in today's video. But before we do, I want to share with you guys the home run opportunity I mentioned this morning over at the Discord. And as you see popping up here on the screen, these are some of the home runs I've managed to find this week alone. And while it's not guaranteed to be this way every single time, we strive for opportunities like these every single day. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So these are the stocks I mentioned this morning. Every single one of them gave jumps of 3 to 5%, 5 to 10% plus, but one of them turned out to be a home run, and that was LASE. We caught this one in the pre-market sitting sideways. The inflow stayed above the midpoint, full strength on 42 vision, and it gave a jump of 10 to 15% plus within minutes. Then it consolidated, inflows crossed again with strength, full strength here on 42 vision, and within minutes gave a highest point of 20% plus since the moment we mentioned it on the day, guys. If you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. So here we are with the SPY, the S&P 500 index, and within the last several weeks, we've been in multiple channels, right? We've been in the 360s to the 370s, and from the 370s to the 380s, and we're back down here now between the 355 and the 365, right? And this is super important because we've actually worked our way out of these support levels into resistance levels, and then new resistance levels have been formed, such as 380, and rejected, broken through key supports on the way down, and here we are fighting to hold above the 52-week low of 355, while a lot of different news and headlines are coming out, guys. And then going into CPI data later this week, and then we also have PPI data and the FOMC minutes, guys, that comes up tomorrow. This is going to be huge because the Fed is going to make a decision, and I'm about to share with you guys how that correlates to the headlines that you saw earlier in the video popping up now here on the screen about the bond purchases in England. We're going to break it all down in today's video. I'm going to pull up the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 vision indicator, getting connected to the SPY bot, the QQQ bot, our newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities, whether stocks are going up or going down. And you can now join the members using these resources to maximize in either direction by receiving this clarity and edge over the charts. And in today's video, I'm going to pull up the inflow versus outflow indicator, which adds that extra layer of confirmation and gives us that edge within the volatility. Slots are now open for those interested. The link is down below in the description to the 42 vision indicator and getting connected to the inflow versus outflow. So here we are with the SPY. This was the first bull indicator on the 30-minute popping up, and the first time that the inflows crossed since the last bear indicator that popped up on October 6th, and those outflows dominated since then, and we had been going downwards from the 380s back down to the 52-week lows. So this seems like a dead cat bounce or a momentum bounce based off the 52-week low, and it quickly happened, and it was looking pretty strong, and quickly all of a sudden these headlines came out, guys. This is important because this changes the theory and the expectation and the whole reason this run happened. If you've been watching my videos before, we've talked about why things ran so fast, and I shared my honest, humble opinion and my thoughts and perspective, not financial advice, but I did not believe that a pivot was on the horizon or anywhere near where we're at, right? And I've shared that with the Discord members as well in the chat. So super important to understand that this was all hype and speculation. And I stated, I do not believe there will be a Fed pivot unless the Federal Reserve makes that decision. Until then, I do not think to change my thoughts otherwise, right? If the Fed was to pivot or state it, well, then things have to be reanalyzed. But right now, this is all speculation and hype, what we saw in the markets, and it was a great move to the upside, quickly faded, and now we've been to the downside, and tomorrow is the FOMC. So with England and their bond purchases slowing down or ending, as they state, I believe it's this Friday, it changes the whole dynamic, right? As you saw there earlier in the video, I stated back on the 4th that this rally was actually looking like it was slowing down or overextended based off 42 vision on the 1-hour chart, and then things actually kind of sat sideways, and a strong bear indicator popped up here on the 6th. Those outflows began, and things have dipped since then, and we've came right back down to where we started on the first run. And everything that I've shared in the Discord up to this point has been pretty crucial and pivotal, right? As we see the charts, this is all going based off the charts, and then the news and the outflows and the inflows show that extra layer of confirmation to what it is that I was analyzing. So not financial advice, just my perspective and opinions alone, and nothing's ever guaranteed, but super crucial to be watching the charts because the behavior and emotions is in these moves, guys. And it's no coincidence that things went up as much as they've gone down. The same amount we went up is the same amount that we came right back towards. And now the question mark is, where do we go from here? Well, with tomorrow's FOMC meeting, we need to see how aggressive is the Fed going to be. And now the markets are sobered up again that there isn't a Fed pivot or even a chance of it anytime soon. It's coming at some point, but not as soon as the markets were pricing it in within these two moves of Monday and Tuesday of last week. This is super important to keep in mind where we're at. Opportunities are becoming huge the lower we go and the closer we get to a bottom. We don't know where the bottom is. No one knows if we're even close to it or if we have more room to go. But one thing we do know is that volatility is here to stay, and I've been stating it all year round. Now, when you go to the 1-week chart, you could see that we've had a bear indicator here in the outflows cross since January, and this lasted all the way until June, until we hit our second dip area. We had a violent rally to the upside, and that bull indicator was pretty weak because quickly things slowed down and they switched from green to red, and the outflows have crossed again here, and now we have a bear indicator again, canceling that out. And the last time we got a bear indicator, it lasted for several months, and here we are going into 4 weeks of this bear indicator popping up, and the question mark is, how much longer could this last? Well, based off the most recent one, it lasted for several weeks to months, right? But one thing we do have here is the outflows to watch, and if we break below the lowest point that we've seen or find a bottom close to it, well, we're currently at minus 36 on the 1 week on the outflows, and the lowest that we went was minus 63. Now, based off the history of the chart and the 2020 crash, we went as low as minus 87. So if we break through minus 63, minus 60, anywhere in that area, the next level is down here towards minus 87 to minus 90 to see if this is actually going to find support within that area. That's going to be crucial and critical here. And then when you zoom out even more, right, and remove some of the noise and volatility, you could see that based off the 1 month, we got a bear indicator here back in June, the full transitions, and this is the first time in years, right, over a decade, that we actually see multiple red bars back to back, right? Every single time on the 1 month back in 2018 and 2020, it only lasted for about 2 months. This is the first time it's actually lasted for more than 3 months. The last time that happened was in .com bubble and also 2007, and the outflows here have room. We're actually near the outflows of the .com bubble when it was around minus 35 and minus 54 at its highest point, but in 07 it went as high as minus 75, and we're currently at minus 38. So something to keep in mind as well, that there still could be room, or we could find a bottom somewhere in between in that amount of outflow. Now, just because it's happened in the history of the charts doesn't guarantee it's going to happen again, but you could see since January and going into December to January how those outflows began and how it continued going lower. Once it crossed that midpoint there, this has continued to go into further weakness, guys. And we're actually past the 2020 on the 1 month, and we're actually now close to the 2000.com bubble, right? And we need to see how far do we go between that area of minus 35, minus 38, all the way towards minus 57, and the 2000, which went all the way down minus 75. Now, let's zoom back in here on the 30-minute, and this is important because as we see it here, it's trying to find support above 355. This is going to be crucial, and I've talked about this in previous videos, how important this area is as support. If that gets broken through, the next support I have is 345. You could use 350 as a midpoint, but 345 will be crucial moving forward to the downside if 355 gets broken through. And to the upside, we want to see this break above 362, guys. Multiple rejections here on Friday and even today. And if we can accomplish that, then getting back up towards 365 is the next resistance level moving forward. Now, if we zoom into the volatility here on the 15-minute, you could see the full transition here from the dip area on 42 vision, that bull indicator, and that rip area up here, and rejection, as I stated, close to the 362 area. Bear indicator quickly popped up, things dropped back down, outflows crossed, and in the momentum to the upside, those inflows crossed as well. So a lot of volatility, a lot of movement, and this is all about having an edge and clarity to maximize. If not, it could be missed, or it could be a surprise out of nowhere, right? So super important. Now, on the 30-minute, you could see that these outflows are still dominating, but some inflows are trying to pick up, and I'm going to be watching if these inflows can cross back up and actually try to go higher, or if this is going to reject going into tomorrow and pull down lower, and how the Fed speaks could highly impact where we're going. If we're going lower, or if we're going to find support and try to have a rally. Now, if we do have a rally and the Fed is talking about not pivoting in the long term, but everybody is getting excited about a few dovish words, any move to the upside will eventually fade, in my opinion. Again, not financial advice, and it could last for several days and weeks. It can even last for several months, but eventually it will pop, especially if the Fed is not pivoting and all it takes is some hot CPI data to come out, guys. Keep that in mind as well. So super important levels here to stay above 355. Below that, I'm watching 345, and to the upside, we want to break above 362, find support there, bounce off of it, go towards 365, and then we can start talking about higher levels based off the charts. As always, guys, thank you guys so much for watching, and let's make some money.